Alright, what's up guys? So hopefully this works. I made another video and it did not quite work. So that is that. So we're going to see how this works. But anyway, I am going to show you guys a quick explanation of my setups here. I'm going to give you guys an idea of what I was looking for today. I traded WISA. I shorted it. So it's kind of my day trading analysis of what I did today, what we were looking to do. I made a quick note here so you can see what my plan was. Basically I wanted to short it as it was going towards the VWAP test at 350. I shorted it at 343, and then when I saw the rejection at VWAP, I had confirmation that it was probably going to flush back towards $3, which it did. And I held as planned. I sold a quarter of my position at 325, and then I sold the remainder of my position at 308, which was 10%. Looking for a 34 cent, about 34 cents to give me 10% from 343. So before I jump into my actual trade, I just want to give you guys an idea of how I found it and what I kind of do in the morning. And I want to give a shout out to Precision Day Trading. So PDT, precisiondaytrading.com, or their Precision Day Trading YouTube channel. They do a pre-market, a watch list and scanner every morning. So this scanner goes up about 8:30. It goes up in the morning, maybe even 7:30 or 8 o'clock or something like that. And it spits out all of the tickers that are moving. So it tells you where the volume is, and it tells you which stocks are breaking out and which stocks are fading. So which ones are, selling off really low, which are down here, these small down gappers. It's which ones have, are down the most, and then these small cap up gappers are the ones that are up the most. So I typically trade small cap stocks. I don't typically day trade large caps, mainly because I just don't have the amount of money to be trading like $60, $70, $100 stocks like Facebook's, like your Teslas, like your VTIQs, all these ones. I just don't have the kind of money lift to trade them, so I really avoid them for the most part, unless there's like an insanely clear, obvious setup. But for the most part, I trade stocks between $2 and $10, and I look to either short or go long. But typically I find I'm more of a short bias trader. The issue is that you can't always short a stock if your broker does not have shares to short. So sometimes when you go long, you can always get filled no matter what. But sometimes if you're trying to short, if the broker doesn't have any shares to short, so they would already have to own shares in order for them to loan them to you, so then you can short the stock. It's kind of a complicated process. If you want to learn kind of how shorting works, you'd kind of, there's a million videos on YouTube. You can go look and figure that out. But the reality is that most stocks, when they become overextended on the day, so when you see some of these stocks here that are up, like huge is up 351%, right? Or like SECO is up 96%. WIS was up 80% at one point today, right? So when these are like really overextended, a lot of times they will pull back, which is what you're doing when you're shorting, is you're kind of looking at some of these stocks as overextended, and then you'll go in and kind of short them and make a little bit of money as they flush back down towards where they should be trading. So I'll go into that real quick when I go into the stock, but right now I just kind of want to go over this scanner. So in the morning I look at this scanner between 8:30 and 9:30, and I kind of get a sense of where things are trading and where I kind of want to look towards either buying or selling, or which stocks I want to kind of keep an eye on for the day, right? So today the main gappers were SECO and WISA. See, DOGS is up there now, but it's a little too cheap, right? It's $1.45. It's already up 50%. So this stock was under $1 when it opened today. It was basically trading at like 98 cents. So I typically don't like to trade too much under $1 because it really takes a lot to move a stock up, but it doesn't take a lot for a stock to go down. So this is why they'll say that it takes it takes a lot of buyers to send a stock up, but a stock can fall under its own pressure. So basically what that means is that if you have this huge level of buying power that sends a stock up and up and up, and then there's no more buying power, even if there's not a ton of sellers, the stock will usually still fall because it doesn't have anybody stepping in to buy, which means that the only pressure that will be coming in is selling pressure. Even if that selling pressure is not as much as the buying pressure, it can send the stock down almost as much, just as much. So that's why when you're dealing with stocks that are below $2, you can have them, flush up to $1.50, which is nice if you got in at like $1. That's 50% gain, right? But a lot of times what will happen then is it'll flush back down to like $1.20. It'll give up like 30-40% real quick, and you can lose a lot of money if you're stuck in one of those flushes, right? So this is why typically I'll trade things that are above $2 because they'll typically have not as much swinging. Like they will swing and they can drop a lot, but typically they will kind of move like 20, 30, 40 cents instead of dropping like, back to under $1. Typically they will hold up a little better, and you can kind of get a better indication of when to get out and when to get in. Cheaper stocks typically they will kind of have a quick run up, and then before they hit like $2 or something, they'll just flush right back down. So if you can get in that, that quick move, it's nice because they're so cheap that you'll make a pretty good gain on your trade. But for the most part, I look to short stocks that are in that position. So like DOGS was, I'd look to short that in the 150 area because it's just overextended, and because after about 11 o'clock, 12 o'clock, you have most of the volume coming in the morning. So between 9:30 and 10:30, you have the most volume, and you'll see stocks trading the most volatility between 9:30 and 10:30. So that's when you want to be buying, or that's when you want to be kind of getting into short towards the end, so then you can catch kind of the flush. Because typically a lot of these stocks, once they kind of get pushed up real high, the rest of the day they'll kind of come back to where they opened, or maybe finish up a little bit, but typically they won't stay overextended more than 100% on the day, which is where you can kind of get an idea of when to short. So I'm going to get into that real quick on WIS and where I look to short and the fundamentals behind it. But I just wanted to kind of give people a sense of how I find stocks, where my mind is at when I'm looking at stocks, and kind of how I target, or I should say how I create my watch list of what stocks I need to watch for the first hour or two, right? So that's the scanner. That's how it works. Like I said, precisiondaytrading.com. Check it out. They are a really good system. They have a good website. They have a good Discord channel. They do a lot of good things, so I do like them. So here's my chart for the day. This is my Questrade account. So I trade mainly with Questrade. I'm in Canada, and I find that in Canada, Questrade is probably one of the best platforms for day trading. Now, it's not the best. I would say it's better for buying than it is for shorting, but you can get some shorts. Like, I've tried to short a few stocks in the past month that I've gotten rejected on almost every single one of them, and I probably would have made money on every single one of those shorts. But if the company, like I was saying, if the broker doesn't have shares to short, then your order will just get rejected, right? So even when I put in my order here, I wasn't sure that it was going to get filled, right? I was kind of looking at it like, well, this is a really good spot I'd like to short. If it gets filled, it gets filled. If not, then, whatever. But it did get filled. So they had shares to short, and I was able to short it, and I made some money. So I'm going to break down this short right here. I'm going to break down the setup, and I'm going to explain to you why I wanted to short it where I did. Okay? So real quick, we can see right out of the gate here, you can see this kind of gray area here is the pre-market. So the second, and like I said, most of the volume starts hitting between 9:30 and 10:30. So you can see this huge spike of volume here, and then it just dies off the rest of the day. And this is typically the same with almost every stock. You can see this one kind of was more extended towards 11:30, but now it's starting to sell off, and the volume's dying out. So this is what you want to kind of pay attention to, is volume and where the volume is going. So you can see here earlier, all of the volume was buying volume. You see these big spikes are a lot of buying volume, right? And you don't have a lot of big red candles with big red volume. And even like you can see some of these red candles have lower volume, right? than the green candles. So this is telling you that, you know, there's a lot of buying pressure. But one thing to notice about stocks, especially ones that might not be as strong as you'd think, maybe like, I know this one had a catalyst this morning, so a lot of times when stocks are shooting up, they have a catalyst, so they have some sort of reason for them to be shooting up, right? So when you see this N over here, it's just saying that there's news. So there's news out on this company. So I will go in here and I will look at the news and try to get a sense of kind of why this stock was popping up. And my news feed is being a pain in the butt. It does not want to work. Oh, there we go. Okay, so you can see here it kind of gives you a sense of why things are doing. So shares rose 34.3% because they reported that WISA ready certification for all 4 2028 8K TVs in the LG OLED ZX and LG NanoCell Nano 99 series. So basically what they're saying is that they've got certified for their 2028 8K TVs. So they, you know, they had a decent catalyst, you know. So this is again a news release just put out explaining why the stock was moving today. So they released this headline at 7 a.m. this morning, and the stock shot up 35%. And if you watch during the day, it was actually up like close to 80% after the open, right? So when I was looking at this, I'm like, okay, this actually looks like a solid catalyst, right? So I was even thinking of buying, but I was actually not really watching it that closely because out of the open, it kind of started to fade, and I was watching SECO and Sava. And then you see it pushed up. And when it did this, it broke VWAP, and then it created this, what you'd call, some people would call it golden cross, or a really good buy signal. So when the VWAP crosses above the small moving average here, and you see the pullback here, when it comes back and touches the VWAP and then creates a new candle right above that cross, this is a buy signal. So this is why a lot of people, they're looking for signals for why they should do things. So these two lines here, the VWAP and the SMA, the small moving average, what they're telling you is where the price wants to be. So the volume weighted average price, the VWAP, is the based on volume and how much it's trading, how many times, like how many people are buying, how many people are selling, how many people are interested, where the price has been in the past and where it is now. The VWAP is going to tell you where it wants to trade towards. So this is where it should be necessary. Like obviously it's different on every stock, and the VWAP changes every day. But based on all the fundamentals, it should be trading close to the VWAP. Now, the small moving average is basically the same thing, but it tells you over the past 20 days or over the past kind of few sessions, it tells you the way that the stock has moved. So it tells you the direction in which it wants to move. So if these lines are trending upwards, typically the stock will go up. It will show strength, especially when they're trading above these trend indicators. So when you see here, the second it pops above this and people see this buying signal, this golden cross, people get in and the volume increases, and you see the buying volume just come in. And that you can see it went up from 340 to 385. So that right there is more than 10% gain, right? If you had $1,000, that's $100 right there, right? So at that time, you're like, okay, this is strong. This is showing strength. It's trading above the VWAP. All these indicators are pointing upwards. It's strength. But what you'll see here is you'll see this double top. You'll see it hit 385 and fail, right? And that's not necessarily a bad thing. Like a lot of times what stocks will do is they'll hit like a new high, it'll fail, it'll come back down to the VWAP, and then it'll retest that high and break it and shoot up and just keep going higher. But as you can see here, this failed. It did what we call a double top. So when it tries to break that same price and it hits that level and can't break it and it fades, this is showing you a sign of weakness. And typically people will call this a sign of death, the double top, because if it can't break that price level, all the people that bought around here are going to be selling. As soon as they see it fail here, they sell. everybody gets out. Everybody that bought here and here, get out, right? The only people that can't get out are the people up here. But when they see it starting to fade black below the VWAP, they get out, right? So this is when you'll see that all the people that got in here are getting out here, and then all the people that bought way up here are selling down here for a loss, right? And this is why you see the movement, because people are scared. The buyers that got in are scared, and the shorters that have been waiting to short this thing are now getting in, and the shorts take over. So this was what I was waiting to see. So like I said here, you see this golden cross. This is the perfect buy signal. But over here, you see another golden cross, or what I would call a rejection, a VWAP rejection. So the SMA tries here to push back above the VWAP, just like the price will over here, right? But you can see this early signal that the SMA, the small moving average, cannot break above the VWAP. And immediately it rejects and starts to move downwards. And so with the VWAP, see how both of these are now pointing downwards instead of pointing either sideways or upwards? Both directional indicators are now pointing downwards. And you see this rejection of the SMA, how it crosses above it, but then immediately gets rejected. So this tells you that this is a sign of weakness. And when you have a stock trading below the VWAP for a significant period of time and it tries to break it but can't, this is a sign of just very, very, very weak trending stock. So when you see the ability for it to try and break this but then fail, it gives you the indication of when you should buy. So anywhere in this area is a good shorting area. As you can see, I shorted at 343 here. I 200 shares at 343, so that's about $650, $670 I shorted with about 200 shares. Got filled at 343. I had a limit order, a limit sell order, and then I had a little bit of a scare here because it popped right up to the VWAP. But as you see, based on my playbook, based on what my goal is here, and that's to anticipate a VWAP rejection. So as you see here, it comes up to the VWAP, it hits the VWAP, and then it cannot break it. You see like a little bit of movement above it, but then it immediately flushes down. So that's what's called the VWAP rejection. So it tries to break above the VWAP again to try and gain strength and show strength again. But when it can't do that, because all of the indicators are pointing downwards, it is going to sell off. And this is typically where you'd want to buy is this red candle here. You'd want to short sell on this red candle. I was a little early because I was anticipating it because I saw these early indications. So I got in a little early, but as you see, I basically just waited to see if it was able to break the VWAP, and it was able to trend above and then stayed above the VWAP for any significant period of time, or go above 365 or 370, which is where my stop was at 370, about 10% or about 34 cents. I would have sold. I would have got out for a loss, but I waited. I watched it test the VWAP, fail, come back down, fade it out. Here I sold a quarter of my position at 325 for about $10, $15, something like that, just locking up a little bit of profits. And then I waited for the rest to drop. And then when it hits here, I had my 10%, so I made 10%. I was looking for 34 cents. I made 10%. When it hit 308, that was my target. So actually 309 was my target. So I saw 308 on the bid, and I hit, and I bought back. I covered. So I covered the other 3/4 of my shares, 150 shares covered at 308. So it was about $65, $70 in profits. And that's American. So it's about $100 Canadian in profits that I made just from this 20-minute setup here. And like I said, I anticipated this even before the VWAP projection. I anticipated the movement, right? And as you can see here, if I would have simply held, if I would have just continuously hold, it would have just continuously sold off. Because like I said, typically when stocks are overextended or when they're up close to 100% on the day and they can't hold, the rest of the day they typically will sell off. So this is a typical chart for a weak stock that was running up on some good news but wasn't able to hold its levels. Now it might hold these levels, and it might kind of end up closing up 20%, up 23%, which is actually still pretty good, You think most stocks going up 20% in a day is actually pretty good. So that's why when you see stocks up 100, 200%, it kind of gives you that idea that, okay, maybe this thing's going to drop and we should look to short, unless it's just showing extreme strength, right? And kind of the opposite of what happened with WISA there, we can check with SAVA here, Cassava Sciences, and this thing was a very strong stock today, and it showed a lot of strength. So you see here, it breaks below the VWAP for like a couple minutes. It holds there, but not very convincingly. There's a lot of support there at the 225 level. It shoots back up above VWAP. It holds above VWAP. It consolidates above VWAP. So that's what they talk about here is consolidation, right? When you see this consolidation and a failure to break VWAP, it means that the VWAP is acting as support and it's going to be strong. It's showing strength. So anywhere in these areas where it comes back, touches the VWAP, is a buying opportunity. And basically you could just buy and sell this thing all day, because once you see these indicating lines pointing upwards, especially here when you start to see like the high indication and starting to trade way above VWAP, sometimes these can be overextensions, and that's why you see this selling volume. But once you see this come back and it starts to stair step along the VWAP line, or in this case it was the SMA, so the small moving average. So when you see that, you need to be cautious, because stocks can just sell off at any point. But at the same time, if there's a strong catalyst and there's a lot of strength in the stock at the moment, so these indicators are all pointing upwards, it keeps pulling back to the VWAP and showing you strength. So you can use this as an indication, right, to just buy at any one of these pullback levels, right? But obviously, like I said, sometimes stocks start to get overextended, and once something's up 70-80% in the day, like this thing, when it was at 390, it was up almost 80%, right? Actually more than that, it was up almost 90%. You see that was starting to show you a good shorting position, and when it breaks below the SMA here and then below the VWAP, you see that it's clear indication of weakness. And this is just understanding indicators, understanding trend lines, understanding what the VWAP is for, what the SMA is for, what these different indicators are trying to show you, utilizing them to kind of perfect your playbook and your kind of trading strategies, what you're looking for, what you're trying to do, whether you're short bias, whether you're long bias. Either way, you got to use these indicators to give you a sense of what to do, because the hardest thing in trading, especially day trading, is finding an entry. Exits are pretty easy because the stock's going to do what it's going to do. You're either going to make money or you're going to lose money. But you need to have a clear stop. So you need to have a clear indication of, okay, look, I'm looking to, have 10%. So that's my stop loss. So when I get into a trade, whether it's long or short, if it moves 10% in the wrong direction and it maintains that level, I will get out, because I don't want to lose more than 10% at any time. But a lot of times you're given an indication of why a stock is going to do something. So the second I would just see this break the VWAP and hold above it, regardless of whether it hit 10% or not on WISA, I would have sold, because it would have started to show strength and it would have broken above the VWAP and held above the VWAP and consolidated, and then it probably would have gone higher. But because I saw weakness and I got in anticipating the VWAP rejection, and it did give me that rejection, I knew it was going to sell off, right? So sometimes it is about anticipation, but it's also about kind of understanding these trends and these strategies that I've developed, but I've learned from watching stocks, from kind of getting an understanding of what they're trying to do. And you can see over here this level 2 here. Well, it's actually level 1. It's basically just time and sales. So this is telling you what's being sold and bought at the same time. So like these orders here, these are 100 shares being sold at $293.99. So this is probably a short seller coming in, or it was a buyer that's now selling at this level, but it's probably short. These are probably all short orders. So people are coming in trying to short the stock at $293.99. This is 200 shares, right? So you can see it's mostly just selling volume come in. And this is where you get an indication of how strong or how weak a stock is. Because if you're seeing, all of the things in Cassava, that this was all pointing upwards and all of this is flashing green, 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 it's telling you that it's really strong. And it's the same thing I saw when I was shorting this, is most of these were red just like it is now. A lot of these and a lot of the bigger orders, like see 400 here, 300 here, a lot of the orders that are coming in are a lot bigger. So a lot of the selling orders are bigger than a lot of the buying orders. You can see that's 1,000 right there. So that's a pretty big buying order. So this might shoot back up over $3, right? Because you're seeing some big buying orders, right? So this is just an idea of like understanding all of the different fundamental concepts within trading and how you're using those to make money. So I wanted to just make this quick video. I know I haven't talked a lot about day trading. I talk more about investing, and I'm going to make another video about a couple stocks that I'm investing in right now and that I'm kind of have on a watch list. Give you guys an idea of what I'm looking to do and kind of where my mind is at. But I just wanted to make a video for you guys to talk to you guys about this trade, because I thought, you know, the concept of it was perfect. The way I executed it was very good. Obviously, I could have held it and just kind of, you know, been made. I could have sold it at 286 and made probably, you know, almost another $30-$40, right? I could have been up 110, 120 instead of just being up 70, right? But this is the idea of trading, is that you have a plan. To me, my plan is 10%. I want to make 10% every day. If I can make 10% every day and I can consistently do that for the next 2 years, exponentially every day my account will grow bigger and bigger and bigger, and that $100 today will be 120 tomorrow, it will be 150, you know, next week, and go on and go on. Eventually you'll be making $200-$300 with that same 10%, because you're able to trade with bigger share size because your account is growing. So my account now is like $1,200, just over $1,200, you know, or almost $1,300 now from today. You know, it was $1,200, now it's almost $1,300. So when I'm trading with that amount, I'm looking to get 100, 130. You know, this with shorting a lot of times. I take lower risk, so I use smaller share size, but I will also typically make more money shorting, or look to hold longer when I'm shorting, unless I see strength. So when I sold here, it's because it bottomed. I saw it bottom out at $3, and I figured it was going to bounce off $3, and then it might show strength. So I just wanted to get out in case anything funny happened, right? So I got 10%. I was happy to take it. If, you know, once I saw it fail here, if I wanted to get back in at 315 or something and then wait till 286, that would have been another, you know, almost 10% win, right? But I chose to just take my profits and, you know, walk away for the day. And that's everybody's decision, right? Like, my kind of mindset is more, I want to make consistent profits. I don't want to make, you know, $1 million today, or I don't need to make like $10,000 today. I just want to make consistent profits, be consistent. I've only been doing this for about 2 or 3 months in terms of like actually trading every day, or looking at, you know, the market and following long charts and reading trend lines, reading VWAP, reading SMA. It's not easy. It takes a lot of time, but if you can understand these simple concepts and utilize them, you can be consistent and you can make a lot of money, or just a consistent amount of money, in which, you know, if you combine that with your job, say you go to work in the afternoon or something and you make, you know, $100 a day or whatever, and you make $100 day trading, well, you've made more than most people that are making $20 an hour will make in an 8-hour shift, right? And if you can do that consistently and exponentially over time, you're laughing, right? No, I'm not saying it's for everybody. Obviously we need to bring the disclaimer in that 90% of day traders lose money. 90% of day traders are not successful. I've lost money. The biggest loss I had was $74, I think. So about the same amount I made today, I lost on Pixie a few months ago, or about a month and a half ago. And honestly, to me, I look at it as experience. I look at it as, you got to learn from your mistakes. Don't just brush them off and forget about them. Learn from them and understand how you can utilize that mistake to benefit you later, to make money later, right? Sure, I lost money then, but if I think about the same way I lost money then and I don't allow myself to lose money now, I'm saving money. And it's essentially, you know, it's a costly thing, and people say you should trade in a simulator. I did trade in a simulator for quite a while. I traded in a simulator for almost 6 months, and I just couldn't find consistency, mainly because well, there's 3 reasons. The first reason is because in simulator it's typically delayed. So you're typically getting information 15 minutes late, or even sometimes 24 hours late, to the point where you're trading stocks that you already know what they're going to do if you're following along. You kind of have to not look at the markets at all and just watch charts at that point, which is fine. And some people can do that. The second problem is that you're not trading with real money. So like with me, I can make $10,000 on a trade in the simulator and be like, oh, look at me. But it doesn't make me learn, because I don't feel like there's a risk. I don't feel like you're learning from your mistakes, because when you lose money, it's not really your money. And some people can treat it like it's real money, and that's fine. That's what you should do. But I just have a problem doing that. So I found that going live with, and I'm not saying I went live like right away. Like I've been studying this for probably a year, almost 2 years now. Just watching YouTube traders, warrior trading, precision day trading, watching kind of how these guys plan their strategies, how they follow their strategies, how they're not looking to make $1 million. They're just trying to make that consistent profits every day. And if you can be consistent for a week, you can be consistent for a month, you can maintain that consistency, and that's what will make you successful. That's what will make you profitable, and that's what will pay your bills every day. It's not the $1 million trade that's going to make you rich. You don't want those 300-400% gains, because it's a pipe dream, right? You can't always have them. You're going to have them, maybe 1 out of 10 is going to be a home run, and so you can't be banking on those home runs to pay your bills. You need to be hitting those base hits in order for you to consistently have profits and for you consistently grow your account, so that when you have some big losses, you can account for those and you can get back in the game. Anyway, I'll probably cut this short here. I know it's probably a longer video than I wanted. I really just wanted to talk about my strategy on this stock and talk about kind of how I found it and how I planned my short and then how I executed the short. And you can see here like all my indications, all my entries and exits are all placed out on the chart. They're all for you to see, right? So if you have any stocks that you want me to look at, if you have any questions about VWAP, about trend indicators, about shorting, or even about longing, buying, whatever, I'll try and answer them for you. Obviously, my opinion is not advice. Don't ever take what I'm saying as trading advice. It's simply just my opinion on how I think you can look at certain things and how I think we can approach the market, but it is just my opinion. So take it with a grain of salt. Look for some of my other videos. I'm going to make another investing video probably today, and I'm going to try and get that out to you. Let me know what you guys think. Thanks for watching.